We had a strong rally in U.S. stocks today to cap off what has been an amazing quarter for the S&P 500. We actually had our best quarter since 1998. For the Dow Jones Industrial Average, it was even longer than that. We'd have to go all the way back to 1987 since we saw a better quarter than what we just went through. Now, as though we haven't seen enough interesting statistics this year. Of course, this year's 2020 with two different 20s in it, and the S&P 500 was down approximately 20% in the first 3 months of the year, and it's up approximately 20% in the last 3 months of the year. So what will the second half bring? Anybody's guess there, but what we do know is we're going to keep on bringing you hopefully relevant and educational commentary here in the Market Outlook video. So we'll take a look at all the market action here tonight, see what that means for our posture. We'll then get into a trade application example in an area that I've been kind of pounding the table on for a few months at this point, and this particular area just broke out to new multi-year highs here today. So we'll concentrate our trade on that area once again. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's June 30th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe. While you're there, check out our description area and sign up for our email distribution list. In addition to that, we're heavy users of Twitter. Make sure you're following me if you're not already. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. And lastly, we have a presence over on Facebook as well. Feel free to join our group at the web address you see there in the logo in front of you. All right, let's go ahead and jump into our charts. And as you can see, I've got chart 6D pulled up here in front of us. I generally bring this chart up first whenever we have a move of at least 1% in either direction. And today was one of those days. In fact, we've now had 5 straight sessions of at least a 1% move in either direction. This is actually the second straight 1% move to the upside that we put in. But the day prior to that, we had a 2% down move. The day before that was a 1% up move, and the day before that was a 2% down move. So we've had 5 straight trading sessions with some fairly aggressive price action there, and kind of reminds us of some of those wider swings we were going through back here in April as well. You can see the distance from the zero line to either the tops of the greens or the bottoms of the reds, and how much more exaggerated those are compared to everything that was trading back here in, let's say, the November to December time period, where we had very quiet trading and very rarely had days that were up or down more than 1%. So this has kind of continued on with the theme that we've had ever since really March of wide swings, and this one was won by the bulls today, as we had a nice little rebound here, actually traded up to about 4-day highs when it was all said and done. Had a nice little boost there within just the last half of an hour today, as well as people kind of putting the finishing touches on their portfolios before sending out their statements to clients and things like that. You will notice that the VIX fell down to about 30 here today, which is still considered historically high, but not necessarily as exaggerated of a index level that we saw back in March and April. So we'll see if that's an opportunity for us to sell some premium. That is where I'll be concentrating my efforts here a little bit later tonight. And that brings up a reminder as well. I placed that trade on INO on the last time I did the video. That was that Inovio speculative trade. I wanted to bring this up because I thought it was kind of fascinating, and some of you that aren't quite as familiar with options trading might not be aware of this kind of strange phenomenon that happens on occasion. So down below here you can see we've got our 10 sold contracts of Inovio, and that's the $15 put that expires here in just 2 days. So they're weekly contracts that'll expire here, hopefully expire worthless for us here in a couple of days. We ended up getting filled on those at 35 cents as that trade got filled. I guess it would have been Friday morning, and those contracts are now only worth about 7.5 cents. Now you'll notice that our P&L on the day was actually a positive $25. Some of you might be thinking, well, that's good. The stock must have been bullish, right? Not necessarily. You can see that this stock was actually down 15% today. 1.5. Now remember, when I set up that trade on Thursday night's video, I said the stock would need to fall 50% in a week for us to lose money on that trade. And so a 15% one-day down move might scare some folks, but for the type of trade that we set up, it didn't scare us in the slightest here today. In fact, this is a strange situation where this bullish trade actually made us a small amount of money today on a day when this underlying security was down 15%, which would be a horrendous day for many companies. And that all goes to the fact that we are benefiting from, that time decay and some of the gamma as well. So anyway, as long as Inovio does not fall another, let's call it $11 per share in the next couple of days, we should be in good shape on that particular trade. I did want to show you as well here with today's statistics. On the Market Watch tab, I've got the visualize area pulled up, and I've got the S&P 500 watch list pulled up. Now you'll notice today we had very strong breadth across the board as well. The vast majority of stocks were up today. In fact, all 11 sectors were up today. We'll talk about that a little bit later. We were led higher by energy, and I think it was technology did pretty well. But anyway, you can see here from an S&P 500 perspective, about 438 of the 500 stocks finished in the green today, and we only had approximately 64 that finished in the red. So again, this was a one-sided market here today, and it was one-sided for the bulls. Now this has been something that I've been talking about not only in my premium classes, but also on Twitter here recently, that we're actually in a pretty seasonal perspective, a strong seasonal moment here right before the 4th of July holiday. I'm going to pop over here to Twitter real quick. You can see that this was something that I retweeted here today. Now I know this is probably going to be hard for you to see. Let me see if I can zoom in. Yeah, it looks like I should be able to. I'll read this off as well. But these are basically statistics for the first few days of July's trading before the 4th of July holiday. And historically, it's been a very strong period. There's been a lot of consistency in that period. You can see in the case of the S&P 500 going all the way back to 1999, 18 of those years you saw positive performance, and only 3 of those years you saw a negative performance. And we're talking about the first days of July prior to the 4th of July holiday. So that bodes well here as well. And of course, it's helped that so far this week we've had 2 straight 1% up moves, and we'll see if that continues or not. So be aware of that seasonality there. Also, while we're over here, let me go ahead and take a look here at our sector selector. And you can see here that the technology area is number 1 for the 4th straight week. In fact, it's been number 1 every single week, going all the way back since the beginning of May, with the exception of 1 week there at the end of May where it slipped to number 2 for just 1 week. But otherwise, technology has had a stranglehold on the top slot from a sector selector perspective. This gets put together once per week, so this is as of Friday's closing information. Communications rallied back to number 2 this past week, and then financial stayed at number 3. On the downside, you do see those interest rate sensitive areas like real estate and utilities struggling to kind of keep up with the rest of the market. All right, let's go ahead and pop back on over here to our Thinkorswim platform, and I'm going to go ahead and pop up our next chart, which is 4B. This is the market forecast 4 grid. Now, when we're looking at this, a reminder that the background colors of the chart will give us a quick visual as to whether our posture is bullish or bearish at this moment in time. And probably to the surprise of many of you, we actually have bearish postures across the board here. Now, as I try to regularly bring up when this situation unfolds, I will yet again remind you to tread cautiously. This is probably not a moment in time where you bet the farm against the whole stock market right here, right now. First of all, remind yourself of what I just showed you a moment ago, which is the first days of July, or basically the week right before the July 4th holiday, you do see more bullishness than bearishness, generally speaking. But just as importantly, whether the seasonality works this year or not is anybody's guess, but what is important from a charting perspective is that all four of our charts that we see here in front of us have green moving averages. Remember, when the green moving average kicks in, it basically means price is above a rising moving average. So the background colors are pink, telling us that the market forecast technical indicator has a bearish posture right now. And these are weekly bearish postures, so none of them are strongly bearish. They're all weekly. But you can see the green line is drifting over. It's slumping lower at this point in time. And so that's why you do have that so-called bearish posture. But the path of least resistance continues to be to the upside in what has been a very strong 3-month period that we've just gone through. And with today's rallies on all four of our indices, we do see prices above those rising moving averages. So basically we have conflicting information. The market forecast technical indicator suggests we have a little bit of bearish posture. On the other hand, the 30-day moving averages are still saying, you know, the sky is the limit, the path of least resistance continues to be to the upside, and the trend is an uptrend until proven otherwise. In other words, we would need to see consistent trading below the moving average to assume that this trend will not hold. Right now, the assumption is that the trend will hold. So a lot going on here in terms of news stories, of course, with coronavirus and everything else that we're dealing with. And so it does have the tendency to push the markets around. Perhaps we're going in a pattern this year. Maybe the first quarter was down, the second quarter was up. Maybe we're in the third quarter now and we go down again. Hard to say. But what we do know is that the charts change every single day, and that gives us an opportunity for those of you that tune into this video every day to evaluate those changes and try to determine whether they are useful for helping us gauge our next best trade that's out there. So anyway, just to put a wrapper on it, you can see the S&P 500 was up 1.54% today. The Dow Jones was a bit of a laggard. It kind of led yesterday on Boeing because Boeing was up so much yesterday. Today, Boeing was down significantly, and therefore it kind of held the Dow Jones back. It was only up 0.85% today. The NASDAQ composite, which has been the leadership area of this market for months, a lot of those technology stocks that I just mentioned on the sector selector are part of that NASDAQ composite. And NASDAQ composite is up 1.87% today. And then we do have the Russell 2000 here. It was up 1.42% today. So all of them with a very strong showing to wrap up the quarter. All right, let's go ahead and now take a look at our 3 green arrows setup. And where are we at with 3 green arrows? Here we are. At this current moment in time, we don't have any of these charts that have 3 green arrows. All of our charts currently have a mix of red and green arrows. And in all 4 of the charts' cases, it's the stochastic that is the issue. You can see here we have a phantom red arrow on the stochastic here on the S&P 500. Here's our actually, we just kicked back to a green arrow today on the Dow Jones there on the stochastic, but the MACD still has a red arrow. Down below here, we do have both the MACD and the stochastic on the NASDAQ composite red arrows, and on the Russell 2000, we have the MACD with the red arrow. We actually just got a green arrow back there on the stochastic. So surprisingly, it almost looks like it's the Russell 2000 that's showing the best chance of flipping to 3 green arrows the quickest this time around. And remember, that had not been the case for quite some time. The Russell 2000 was kind of a lagging index, but this time around, it's possible it could lead the next move higher. So we'll keep our eye on that. If we get another big day tomorrow on the first of the month, remember there is seasonality from a first of a month perspective as well. For those of you that like those type of statistics, I would encourage you to pick up a copy of the Stock Traders Almanac that they put out every single year. But there is a first of the month phenomenon where you have a significant amount of the market's total gains for the whole year on just the 12 starting days of each of those 12 months. So more times than not, you do see bullishness on the first day of the month. And so we might very well see the Russell 2000 have a nice move tomorrow. If that's the case, we could go to 3 green arrows as soon as tomorrow on the Russell 2000. So keep your eye on that. I'm sure David will inform you of it if it does occur. All right, let's go ahead and do some 12 grid analysis now. This will be a particularly interesting, considering the 12 grids are set up here with these little numbers to the right of each of the charts, and those numbers represent the percentage increase or decrease of those securities over the past 3 months. And a lot of times, of course, it's a rolling 3-month period, so you don't really have great markers from beginning to end. But right now, this happens to be the last day of the quarter, so this will give us a very good sense of how did these securities do in the second quarter of 2020. And so let's kind of go through some of that information. First of all, I did want to point out gold has really been impressing me. And those of you that have been watching the video over the last several months should be well aware of that. We've taken lots and lots of gold trades, probably too many for some of you. But if that's the case, I would encourage you to turn the video off early tonight. That will be some foreshadowing for our trade application a little bit later. But gold has been one area where I kind of was digging in my heels saying, hey, there is something special brewing here. And that had been the case. The nice thing about gold is that it doesn't always have to work in conjunction with the stock market. It kind of, dances to its own tune, as it were. And right now, we've found that gold has benefited as money has been pumped into the system. And you can see that gold was up another 0.44% today. This is actually multi-year highs that we're dealing with on gold. So you can see that it has a green moving average, so it's above a rising 30-day moving average. It has a dark green background color, so that means that the intermediate posture is strongly bullish. It's at 92.66 right now. If you were to compare that to all the other intermediate levels that you see on these 12 charts in front of you, you will notice that gold has the highest level there. So in other words, you could theoretically say this is the strongest chart from the market forecast perspective right now. But it doesn't end there. If I were to right click and maximize this cell and show you, if we went back 3 years, we are at 3-year highs with today's move. Not only that, but if we went back 5 years, we're at 5-year highs with today's move. If we went back 10 years, we're not quite to a 10-year high, but we are approaching it. This move today took us all the way back to this time period back here in late 2012. So anybody who had been buying gold for the last, let's call it 7 years or so, should now be making money on that particular asset class. Now, depending upon when you bought it, you might not have a stellar return, but at least you should have positive returns along the way. So we've seen some really good progress there out of gold. And I get a lot of trades wrong, as we all do, but I am happy to report that those of you that were listening closely will know I've been a very strong bull on gold over and over again for the last several months, and I'm glad that that is working out, because sometimes when you overboard in one particular area, it can bite you. And we did take a lot of trades, whether it was on Newmont Mining or the junior gold miners or that South American miner BVN that we took that time. We've had a lot of trades, and so I'm glad that they have mostly been working out so far. Other areas that are in strong trends might not look quite as good as what we see there with gold, but foreign bonds doesn't get talked about a lot. We use BNDX as our proxy for that. You can see that that's in a pretty strong trend. The problem is you kind of have to temper your expectations when you're looking at trends on bonds, as you would assume. The returns are usually pretty mundane, and so this was a 2% move for the foreign bond market over the last 3 months. Now remember, that's not going to include any of the distribution payments that BNDX would have paid you, and most bond funds pay a monthly distribution, and so there would have been a little bit more on top of that in terms of any sort of capital return or distribution from income that would have taken place there as well. But the trend itself looks very nice, and similar to gold, it has a green moving average and it has a dark green background color telling us that we have a strongly bullish posture there. So those are probably the two best looking trends at this moment in time. In terms of what's not really working so well, you can see that the U.S. Treasury yield has been kind of languishing. As it stands right now, we ended the quarter at 0.65 on the 10-year U.S. Treasury yield. That is not quite at a multi-month low, but it does take us back to some of those lower areas that we were dealing with back in April and May. So that's probably one of the areas that hasn't been working so well for traders there. These other charts up here towards the top, they don't look terrible. They kind of look like they're gearing up for bounce possibilities. Even real estate had a nice little bounce here the last 2 days. And by the way, we started a brand new dividend growth investing class portfolio today. So that's the only one of our 8 trading rooms where we started over every 6 months as a result of us having to build long-term portfolios and not necessarily selling out of those. So we intentionally start over every 6 months. I'm bringing that up now because I occasionally get students asking me, hey, I came into this kind of midstream, what should I do? Should I go back and, put all those same stocks that you guys bought in your class in my own paper money account? Should I just start from right now from scratch? What should I do? And sometimes I just say, well, you know what, we've got a brand new portfolio that we're going to be putting together starting, whenever, and this happens to be that time. So if you are a premium or a plus member of Market Scholars, I would invite you to listen to my recording today, where not only did we buy a REIT, so that's why I'm bringing it up now. Our head-to-head matchup was in the REIT space, so our very first position in that brand new portfolio was a REIT with a long history of increasing dividends. But in addition to that, because this was the first class of this semester for dividend growth investing, we also put in 4 what I call stink bids. And stink bids are this idea of putting in buy limit orders on very high quality stocks that you want to own, but they are deemed too expensive at this moment in time, and the market would need to fall in order for those bids to be eventually filled. Now, as I tell my students, those should not be expected to be filled in any 6-month period, but every so often you get lucky. In August of 2015, during the mini flash crash, we had several of our stink bids filled and had some pretty amazing prices when it was all said and done. And of course, we had some of our stink bids filled last semester as well, as the stock market was falling dramatically as a result of the coronavirus. So rather than sit there like a deer in the headlights, having those stink bids ready and working on your behalf, whether you're at your computer or not, could be useful in some circumstances. So if you're curious as to what 4 stocks that I selected for our stink bids this semester, that information will also be noted in our dividend growth investing class portfolio here today. When we look at these stocks up here, or these ETFs up here at the top of this 12 grid, you will notice that all of them have that light pink background color telling us that the market forecast intermediate posture is weakly bearish. However, all 3 of those, so whether you're dealing with the United States, whether you're dealing with developed foreign stocks, like a lot of stocks in Europe and Australia and Japan, or whether you're dealing with the emerging market stocks like China and India, Russia, Brazil, etc., all of those are find their prices above rising moving averages. Now, this is in US dollars, so obviously if you're in one of those other parts of the world, your charts might look a little bit different in your own home currency. But for our purposes here in the United States, if we wanted to tap into those trends, they are still largely higher at this point. But in the case of EFA, we would want to see a bounce very, very soon because we've come off of a high here. We've come down to this level that should be acting as a launch pad. The last time EFA touched that 30-day moving average was back here on May 14th, and we had a nice burst there within the next week higher, and that started that next move higher. So we're hoping a similar thing gets pulled off here very, very shortly if you are bullish on the developed foreign stocks that are out there. Let's go ahead and take a look at the sectors now. I mentioned before all sectors finished higher here today, and so it was a good day across the board. The best performer was XLE, which is energy. It was up 2.3% here today, so a very strong showing there. We also saw that technology had a good showing. It was up 1.79% today. You can see it's the only green chart on the board, telling us that that's the only one that currently has a strongly bullish intermediate posture according to the market forecast. And then also real estate had a very strong day today as well. It was up 1.46%. Again, I kind of like the way that real estate is bouncing right here. That was part of the reason I wanted to bring up that head-to-head matchup in my dividend growth investing class today, because real estate has really struggled in the last 2 or 3 weeks, which of course when those securities go down in price, their dividend yield goes up. But it looks like they're trying to turn a corner here. So if you were waiting for a better entry in real estate, you might have just received it here in the last few weeks. We could see another move higher here in real estate in the coming weeks. We'll have to keep our eye on that situation. All right, let's go ahead and quickly take a look from a global perspective. What's going on the primary 12 grid. So this is chart 5E for those of you that are premium members following along at home. Right now, the only green chart on the board is India. It was down today, but had a very, very strong rally in the second quarter. You can see India was up 26%, which was actually the best performing, second best. I take that back. Russia, right below it, was slightly better than it. Russia was up 27% on the quarter. And part of that might be as a result of what was happening with energy prices. A lot of oil stocks rebounded strongly there. And Russia, of course, is a nation that is very oil rich, so that tends to help them a bit more. I didn't show you that a moment ago, so maybe I'll do that just to make sure we've got that box checked. Back over here to the sectors. I should point out here that energy, believe it or not, actually had the best performance of all of the sector ETFs in the second quarter. It was up about 32% over that time period. So while the trend of technology has been stronger and more consistent, technology did not sell off as aggressively in March and therefore didn't have as sharp of a V-shaped recovery as what we saw out of energy, which really got hit hard in March and therefore needed to go up at an even faster pace to keep up on the upside there. So energy was up 32% for the second quarter. Technology was up 27% over that time period. All right, let's get into our trade application example. I kind of gave it away earlier, but we will be focusing on the gold space yet again. Let me come on over here to, I think we can just probably pull up chart 4A for this. And I'm going to go back to GDXJ. Now, if this sounds familiar, it's because it probably should. We took a trade almost exactly like the trade I'm about to show you here a month or so ago, and that trade has successfully rolled off of our books. And so we're going to try to roll the dice again and implement a very similar trade for this next couple of month period and see if this trend can continue. But I showed you earlier that gold prices themselves were basically at 7 or 8 year highs. GDXJ, which is an ETF that tracks the junior gold miners. So these are a lot of the smaller companies out there, the more speculative gold mining companies, many of them not even profitable. But they are generally kind of viewed as kind of a supercharged area. So when gold prices really start kicking into high gear, the most speculative areas are the ones that benefit the most. And the smaller the gold company, the greater the chance is that it can have a bigger percentage move to the upside. And so you can see we've had some really nice moves here in the last, let's call it 4 sessions or so, with today's being the biggest of them all. We were up 3.3% here today. And as you can see, our closing price is now at a multi-month high. We did not hit an intraday high because on this candle back here we hit 50.37 and we did not hit that today, but you'll notice that this candle back here closed way down here at like 48 bucks. Today's candle closed at 49.58. So from a closing price perspective, multi-month highs on the junior gold miners. And you can see, of course, we've got that dark green background color telling us that that green line on the market forecast is in a strongly bullish position right now. We also have the market sentiment line rising. We also have the near-term line rising. And the momentum line is falling, but remember that one we don't really trade off of because it moves basically up and down every single day. So it's not quite as important for us to show bullishness in that particular area. The others are all good to go. So let's go ahead, come on over here to the trade tab. And we're going to come out here to the August contracts with 52 days left until expiration. And then we're going to come on over here to, I wanted to focus on the 43.42 put spread. So let me load that up by right-clicking on the 43 and going to Sell Vertical. That will then load up your trade down below where you're selling one contract of the 43 put and you're buying one contract of the 42 put. Again, these are the monthly contracts in August. You'll notice that we receive a credit of 23 cents on this. And if we get our calculator out here and then click Confirm and Send, I want to concentrate on this area within the confirmation dialog box that says max profit versus max loss. Now again, we're just doing this for paper money purposes, so you'll want to position size appropriately with additional contracts if you want. In this case, with just one contract, it makes it nice and easy. We take the $23 that we take in as a credit up front, and we divide that by our max loss in this trade, which is only $77. And you can see that our return on risk is 30% if you round up. It's technically 29.87%, but again, right around that 30% threshold that we generally will seek out. In addition to that, you can see that our break-even price here is 42.77. So I'm going to go ahead and click Send, and then come back on over here to the chart and show you where 42.77 is, and it's approximately, can't get my cursor right on it, but it's about right there. And so I found that to be a pretty interesting level as well, because it basically will take us back and cut us through this candle as the only recent candle that went below where our break even of this trade is. And then you'll notice that 42.77 is right kind of in this area over here where we had high congestion. In other words, we had resistance over here for maybe 2 or 3 weeks, eventually broke through it. And so the idea is old resistance becomes new support. So we're hoping that that will bail out our trade in case this doesn't continue to grow to the sky like we've seen for the last 4 sessions right here. Okay, so that wraps us up for not only tonight, but for the first half of the year of 2020. And my goodness, what a 6 months it has been. For those of you that are Premium and Plus members, remember that today actually marks officially 2 years of David and I being in business together. Many of you were with us for a few months before that with our beta period as well. But the point of me bringing it up is if you are a premium member and you signed up with us initially, this is your 1-year countdown now, because June 30th of 2021 is when your expiration date is. So let's do our best to learn as much as we possibly can here in the next year to come, and we can't thank you enough for your support over that time period. So keep your spirits up, keep your head up. You survived the storm of 2020 so far, and who knows what's in front of us, but what I do know is David and I will be here sharing our insight with you as often as possible during these videos. So until next time, I want to wish you all the best of success with your trades and your investments. If you got value out of tonight's presentation, please go over to Twitter for me and click like, and we'll see you all next time. Take care. Bye-bye.